The following is a presentation of TFNN. Live at TFNN, The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the April 28th marvelous Monday edition of the Money Masters Show. I'm your host, Steve Rhodes, author of Mastering Probability, a daily trading and investment newsletter that is the intelligence for creating your financial freedom out there. Folks, hope you had a great weekend. Great to be back with you. My outcome each day is to help you to become a better money master and to provide you with the tools that empower human potential. Because you and I, we must master living up to our potential each and every day. We're going to be tested each day. So let's begin our day with empowering beliefs. How do we do this? I've put it all together, folks. My favorite thing to discuss, just the overall formula for how you control your mind, and that is become your own electrician, the electrician of your beliefs, because beliefs have the power to create and the power to destroy. You and I, we've got the extraordinary, awesome, incredible ability to take any experience of our lives and do one of two things. We can create a life of meaning, what will typically happen, and these are the beautiful results, is they can save our lives, they can empower us and take us to places that we never even dreamed of. And then there's those folks that'll take anything that happens in their life and they will disempower them themselves. We don't want to do that. Think about it, though. It's truly the beauty of the markets we trade. We've got bulls, we've got bears. I guarantee you one that sees an event as a selling opportunity, one as a buying opportunity. And you see, it's our beliefs that we trade. It's our beliefs that give the meaning to all the events, the statements, the criticisms that come into our life. You and I, we are the ones that are in control of that meaning. And that really is pretty cool, because the only person who controls us is ourselves. And what we can or cannot do, it really is rarely have, a function of our capabilities. It's more likely a function of our beliefs about who we are. And that matters because each of us, we're always trying to break through. It doesn't matter how successful your life is. You're always looking for more out there. That's what's called growth. And that's the beauty of everything. All personal breakthroughs begin with a change in beliefs, even for those who have extraordinary success. And the way to change is to find the thing that is holding you back, that old disempowering belief system. Because you've got to believe at your deepest level that is what's holding you back. And then if you continue to believe in it, it'll cost you in the present. It'll ultimately only bring you one thing, and that's called pain in your future. If you don't really think that it's that big of a deal, you won't do anything about it. But folks, if it's holding you back, then what you want to do is you want to know what's holding you back. And you want to know that because knowing what you don't want is just as important as knowing what you do want out there. You want to rid yourself of those disempowering beliefs. You want to go ahead and replace those with the beliefs that are going to take you to the places that you dream about. Folks, you and I, we must know that at any moment the decision that we make can and will change the course of our life forever. Could be the next person you stand behind in line. Could be the next person you sit next to on an airplane. Maybe it's the next phone call you make. How about the next phone call you take? Could be the next movie you see, the book you read, the newsletter that you subscribe to. Any one of these things could be the single thing that causes the floodgates to open. And then, that's it. Then, everything you've been waiting for will fall into place. Hope everybody out there had a great weekend. Let's go see how these markets are falling into place out here. Right now, we've got the S&P. It is trading up 7 points, trading out at 1870. The Dow is up 96 points, trading out at 16,458. Russell 2000 up 4.5 points, up 0.4%, trading out at 1127. NASDAQ Composite up 17 points, trading up 0.4%, trading out at 4,092. Lead the charge to the downside. Priceline getting in on the action out here, down $14 and change. Amazon off $11. Netflix down 9. Baidu off about 8.5. VIP Shop Holdings down 7. Chipotle down $5.70. National Oil Well Varco NOV down $5. Google off 5. Sohu down 3.40 to the upside. On a buyout, Furex Pharmaceuticals up 22 bucks out here. We've got Susser Holdings Corp, SUSS. Let's see, what do they have out here? Energy Transfer Partners to acquire Susser Holdings for $1.8 billion. So that's a nice 36% or so move to the upside out here. Apple's up 13 bucks, up 2% out here, trading out at $5.84. You've got Biogen, BIIB, up $3 and change. Our call number is 877-927. 6648. Give me a call, folks. Happy to take a look at your stock chart. It began the early morning show, the 9 o'clock show, taking a look at the 30-minute chart. We were looking at the ES Mini. Let's go take a look at the NASDAQ out here. Let's take a look at what the NQ is doing. Now, what we took a look at was the following. We looked at as price was moving down into the 11 o'clock time frame. This was on Friday, and this is just simply, we're taking a look at a 30-minute chart, so we're getting an idea. The nice thing about a 30-minute chart out here is that the patterns that work on a 30-minute chart, they work the same way on a monthly, they work the same way on weekly and daily. And specifically what I mean here, we're taking a look at when a rubber band gets stretched, moves into either overbought or oversold condition, your expectation is that you're going to see some type of work off of that condition. Sometimes it could be a snapback rally. Sometimes it can move fairly high. Well, in this case here, if we just simply take a look at the last set of swing points out here, that's coming in at about 9 o'clock in the morning. That is on April the 24th out here. That's when you had the NASDAQ trading out about 36.17 or so. Let's see, 36.18 and a quarter to be exact. Makes a move. It was extremely overbought at that stage out here. In fact, it made a price relative strength divergent pattern up at those highs, just as it did here on Friday down at the lows out here. In fact, the first lows came in right at about the 11 o'clock time frame. They produced a nice 15-point reading on the 14-period relative strength indicator out here. Bounced a bit for a couple of hours out here before going ahead and making a lower low into the 2:30 time frame out here. 2:30 time frame makes the relative strength index gets down to 22.07. So you've got price making a lower low. You've got the RSI saying, I'm not as weak right now. That's where you would expect to then see, okay, we're going to get a bit of a bounce. Now, in fact, what happened is inside the NASDAQ, really, the bounce here thus far has been relatively tepid. We'll see if that continues out here. The price level about 35.55-ish is your 0.382 retracement. Looks like price is trying to get up to that area as we speak here right now. It's trading out at 35.52. If it can break through that area, then 35.79 becomes the number out here. That would be your 0.618 retracement. So that's what's going on inside of the 30-minute charts. If we go take a look at daily charts out here, let me go ahead and put the daily charts here. We'll go take a look at the indexes in a moment. I'm just going to stick with the futures contract out here. I'm going to pull this back because this is a key chart for us to be paying attention to. What is that? That is the descending price channel that the NASDAQ is traveling within right now. We saw the top of that price channel here get tested on a nice bounce off of the low out here back on April the 15th. We saw price reject the horizontal lows of Uncle Ben Bernanke Day, December 18th out here, a day that will live in infamy until that day is broken. Then we'll no longer really look at that day. But that's what took place on December 18th. That was Ben Bernanke's going away party out there. That's where he had the troops lined up. Even though futures after his announcements did push lower, then what we saw was the Santa Claus rally unfold all the way up into the highs on December 31st out here. Of course, in the NASDAQ, the Santa Claus rally ran all the way at that stage to January 23rd out there. So that's your horizontal support. Also was the bottom of the descending price channel that took place here back on April the 15th. Then what took place here as price moved higher on April 24th, we saw a key reversal session right at the top of resistance. That's the descending price channel. We saw some real conviction to the downside. That was on Friday. We're getting a bounce, most assuredly, as we speak here right now. And until this descending price channel is broken, the trend on the daily charts inside the NASDAQ is to the downside. In order for a real bullish breakout to occur, this descending price channel is going to need to be more than just pierced. You're going to need to see a break of this area with conviction. Otherwise, it is just simply a descending price channel. That is on the daily chart. and that is for the NQ. A totally different picture when we take a look at the Dow, or if we take a look at the S&P 500. But let's take a look at the Dow here. The Dow right now is traveling in what? Traveling with inside a consolidation pattern. Let me move this up here. We'll change that just so I don't have to. Let's go ahead. I'm going to do this on the fly so I don't have to come back and do this here later. There we go. So inside the Dow, up at the top of its consolidation pattern, that's the yellow shaded area. That consolidation pattern right now runs from a low of February 14th, right around the 15,911 mark. That is your support area, all the way up to the high. So you got about 15,911 to 16,508 out there. So what is that about? We'll call it, 600-point move consolidation out here. So we had a key reversal session takes place. That's on Thursday out there. That says you've got real resistance. What this consolidation pattern also says, at least it says to me, is that if the Dow is able to pierce and break through the highs out here, and the highs would mean a close at this stage here above 16,574, you could add 600 points onto that move out there. That would be a break of a consolidation. Otherwise, we're just seeing a bit of a counter-trend rally. Now, the thing here about the Dow is, there's no descending price channel that's inside the Dow. The only pattern that you can see is just a consolidation move that is going on out here. And that's why it's important to be paying attention to the top of that consolidation pattern, where you've got bearish engulfing to bear sash type candles to key reversal sessions out there. And that's real resistance. So we'll see what happens if, in fact, price tries to attack that level. If we take a look at the S&P, let's switch over. We'll take a look at the indexes right now. Let's take a look at here's the Dow. The Dow, if you take a look at its real resistance line, takes you back to that December 31st high, and that is out at 16,588. We've seen the area pierced and tested, but we have not seen it close above December 31st out here, and so that becomes your resistance point, 16,588. Price back to traveling with inside the most recent swing point, which is April the 4th, that high out there, the low 16,392. We did see a break of that area on Friday, but no follow-through as we speak, at least at this stage here. We're talking at the 10:18 time frame in the morning. Let's take a look at the Russell 2000. Let's go take a look at the Russell 2000 index. Let's go see what it is doing here. I just have to find it. It should be right in front of me. There we go. Sort of right in front of me. Let's take a look at the Russell. Let's go see what it has done out here. Let me widen the chart out. Let's go ahead and delete a couple of lines off there. So we take a look at the Russell 2000. What do we know about the Russell number one? I'm taking a look at a trend line going back to December of 2012 out here. We know the Russell has broken through that trend line. It does look, and it also has a clear downtrend in this case here. I guess you could use that as your, let's see here if I can maybe do this and. I'm not going to waste time here during the show as we speak here right now. In order for the Russell to truly get bullish out here, it's going to need to get back inside that trend line. It's got a ways to go. That's at about a price of about 1148 right now. What the Russell has done, it has rejected the low so far of the April 15 swing point, that high 1123.70. It closed back inside it. Says it'll go back and test the lows right around the 1095 level. We'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow is up 126, S&P up about 12 points right now. Goldilocks down $7, 1293.80 out here. You talk about the front line, the trend line here for gold acting as a resistance point. That is the key reversal session that took place on March the 17th out there. That high 1392 is 20. That is your touch point for your trend line. Your next touch points, you could use either the high of April the 14th, 1331, or you could use the high of April the 15th, and that's at 1328. You can see how price this morning moved into that level. So far, it has acted as resistance out here, and if it cannot bust through that area, that again continues to bring in play that December 31st swing point out here. Now, the B point has not, of an A to B equals CD to the downside, has not been broken. Or we've not seen a close below it, is what I should say. 1277.40 is the number out there. And so you're trading at 1293. That is a key number to be paying attention to, because if we see a close below that, that sets up your run down to your December 31st level out here. Likewise, if gold can go ahead and move higher and break this trend line out here, that would be rather bullish. That would mean closing today, as an example, probably above the 1307 area. So you're at the 1293. What we do know about gold right now is that trend line is in effect, and that is your area of resistance. Inside of silver, it's got a similar trend line out here. Silver right now is trading off about 19 cents out at 19 50. Price had just barely closed. This is a very short-term descending trend line. Closed just barely above it on Friday, but today it is giving that action back. Even though it closed just slightly above that trend on Friday, the problem is for silver, it's trading still inside the December 31st swing point. Once you get inside a swing point, if you haven't rejected it to the upside, to the downside, regardless of volume out here, as long as you're trading inside it, you can go test that swing point. Well, in this case here, it would be the swing point low at about $18.80 out there. And trend lines, let's finish this off by taking a look at light sweet crude. Light sweet crude here right now is trading down into a rising price channel. A break of that area would be extremely bearish out here. 100.42 happens to be the 0.618 retracement off of its most recent swing point low. That's from April 2nd. That's out at 98.15 to the high of 104.10 that came in, that little doji can on April 16th out here. And what that says is if you break that level, then let's start taking a look at larger retracements here. Then what you're looking at is light sweet. In fact, that's interesting. And then light sweet crude, 99.10 is your dead cat bounce of the larger move from low to high out here. But really would say, if in fact, to me, it would say, if light sweet crude breaks through the rising price channel, you're looking at $96 price for light sweet crude. Right now trading out at 100.76. Let's take a look here at, let's go back. So we're at April 28th, right? We've got 2 more trading days before the month ends. And it's going to be really an important month. A number of different reasons out here. I'm going to switch. We're going to take a look at different time frames. First, though, let me do this. What do we want to look at here? I'm looking for the tab. Here we go. Is that it? Yeah, let's try this. Let's take a look at the S&P monthly. I'm going to switch back and forth between a couple of charts, but this one here clearly shows what we're looking at. And why is it important? Well, number one, why is this chart important to Steve Rhodes here? Well, pretty simple. If you go back into 1999, that's what we're looking at. So it's a monthly chart that we're looking at on my screen out here. If we go back to 1999, the S&P made a high the month of December, 1473.10. The relative strength reading at that time, right around 72.65 was the end number. Then 1, 2, 3 months later out here, we saw a higher high, March 31st. This is the S&P again that we're looking at. Makes a high of 1552.87, does it on less relative strength out here. Then we saw a move basically sideways. You got the first bearish reversal signal. Didn't take place until September of 2000. So that topping pattern went from December of 1999, quite frankly, until it confirmed back in September of 2000 out here. So you saw quite a bit of a sideways chop from high to low, quite a decent range out here, until you really saw that first reversal signal back in September 2000. You got confirmation the very following, the next 2 months out there. That, would set off a move down to the lows of the consolidation, of the large consolidation pattern, when you saw price get down to the 768 area. Now, we're looking at the tops out here. Take us fast forward into the time frame of May of 2007. May of 2007, the S&P 500 makes a high, 1535.56. Relative strength reading 79.56. Fast forward 2, 4, 5 months later, makes a higher high. Does it with less relative strength. Bearish engulfing candle, very next trading session in November. Boom, move down to the lows out here. We get back, we'll go take a look at the current candle that's in place and why we are paying attention to it. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
TFNN is back with another Tiger Dollar special, and as part of this promotion, not only can you receive up to a 25% bonus on whatever you spend, but you can also gain access to a 5-part live webinar series with Tom O'Brien taking place the week of April 28th. Each morning during the week at 8 a.m., Tom O'Brien will walk you through how he sets up the market live and digest the previous day's trading action while analyzing overnight markets abroad in order to anticipate what kind of trading day to expect. Each 60-minute live morning webinar will be archived by around 9:30 a.m. that very morning, so that if you can't attend live, it'll be available for your viewing pleasure on demand whenever you're ready. Tiger Dollars can be used for any TFNN newsletter or service, and they never expire. So now is a great time to lock in extra savings on all TFNN products. Don't miss out on Tom O'Brien's 5-part webinar series. Get your Tiger Dollars today with up to a 25% bonus on whatever you spend before this special is over by visiting TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow is up 134, S&P is up 12, and what we're doing here is we're studying the monthly chart for the S&P 500 out here. Now, what's interesting here is the reason why we're taking a look at the monthly chart is if you're going to take a look at any changes and trends that would take place, number one, you're first going to see it on a shorter-term chart. So if we take a look at intraday time periods, I think the 120-minute chart, a 2-hour chart, is a relatively good time frame to take a look at a change in trend that could be taking place. So a change in trend will take place first on that, then on the daily, then on the weekly, then on the monthly. We're going to kind of go in reverse here. Now, we're going to be paying. We're looking at the S&P 500, the actual index. When we start taking a look at intraday time periods, the 120-minute chart, to me the cash index has less meaning than the actual patterns inside the futures contract, because when you're taking a look at moving averages, we're taking a look at everything. You don't want to have a void of price out there. Let's say, for example, if you're using the Chapman wave, you don't want to have a void of price. You want to take a look at what's taking place inside the futures contract. So why is this important on the monthly? Because, well, it's not until this month here where we have the potential, underscore the word potential, for the same type of patterns that have formed up at the highs in 2007 and back in 2000. The reason why I say potential is because if we take a look at the highest relative strength reading on a monthly basis to take place, it actually took place at that Santa Claus rally December 31st out here. We saw a RSI reading, again, it's a 14 period. That means in this case here, it's like at the average of 14 months. So 14 period, now versus 14 day out there. Big difference between the two. 14 bar, I guess, might be the better way to say it, so that there's total clarity out here. In any event, price gets up to price point of 1849.44, RSI reading of 77.63. Now, as we speak right now, we're at an RSI reading of 73.86. So we've got a lower relative strength reading. We've got a higher price. Now, no reversal sign out here. And this is really key. And this is really a slight nuance out here. You know, I know I've said it in the past, but it's so slight. And sometimes, you know, if I say it 10 times, well, I get to hear it 10 times. Maybe you get to hear it once out there. And we've got new listeners. But if you take a look at this trading session, the importance of this trading session only really becomes, well, if you see it close below 18, let me get the right number, 1873.96, and that does include 1873.95, it would actually qualify as a key reversal session out there. Now, a key reversal session on its own is not a reversal pattern. What it is, it's a trigger. It's a trigger to say, okay, now this next month, this next session, which, by the way, is the famed sell in May session out here, all of a sudden really becomes critical. Look, if this ends up even if this is not a key reversal, in order to have a key reversal session, you've got to have a close in the opposite direction. That's why I'm saying, you know, in the open of this month was 1873.96. If it closes at 1873.96, and you've got a doji candle. Doji candle is not a reversal signal either. Or doji candle at a resistance point says, okay, we've got some resistance, then it's the following candle that is going to be significant to you. So having these similar patterns present, we won't know for 2 more days, right? The month doesn't end here until April 30th. That takes us into the end of Wednesday, so certainly come Thursday we'll be taking a look at it, unless there is some kind of significant reversal over the course of the next couple days out here. That says that Janet Yellen, who is speaking on, I guess the FOMC should say she's speaking, but the FOMC is meeting tomorrow and on April 30th out here. So it's going to be very critical as to how the market goes ahead and responds out here. We don't really care about the news. All we want to do is pay attention to the different stock charts and the stock patterns that are out here. So I know I've spent a lot of time on that, but that's only to bring things into play. Now, somebody might be asking I heard somebody ask the question, I could just do the energy level that was out there. Well, even if we do see a reversal, what does that mean? That's a great question. I'm glad somebody asked. And what does that mean from the longer term? Well, if you were to look at this stock chart here, okay, and this takes us back in the 1990s. If you were to take a look at the different channels that I have in place here, from a long-term standpoint, when is it, if you're taking a look at here, where with certainty, we saw a change in trend take place? I mean, with certainty. Exactly. It's when price closed below the rising price channels out here. In the case of going back into the 2000 time frame, that took place on February 28th, 2001. You saw a break of the rising price channel with conviction. In the case of coming back into the 2008 time frame here, it happened to be January of 2008. You saw with conviction a break of that rising price channel. So the larger trend, even if we were to see a reversal take place, even if we were to see a pullback, it's really not until price moves down into the bottom of this rising price channel, whether or not it breaks that, whether or not there would be a larger change in trend that would take place. Look, price coming back and testing the bottom of that price channel, that's in the 1600, maybe 17, low 1700s, upper 1600, lower 1700s, at least at this stage here, and you're at 1875. You know, that's a couple hundred, 250, 275 point move, 300 point move, something like that. That would be a large move down. But the reality is, from the overall longer term picture, if you just go back and you take a look at these price charts out here, it's not until you would see a total break with conviction to the downside of those price channels would there really be a larger, longer-term, hey, look out. Now, where would price, if in fact price closes below that, where would price travel to? It would be all the way back to the top of the consolidation pattern that it had originally broken out of, which gets you all the way back in that number that we had said for so long. What was it, 1576? 09, that's it. So it's right around that level where price would then try to find some support. We got a lot of time before then, but the importance is knowing what we're looking at now. So higher close this morning, and not this morning, but on Wednesday out here above the open, and all we are doing is just setting up a potential for a price relative strength divergence, but no confirmation. Inside of the Dow, I believe we have the same pattern really setting up here, the potential for a key reversal session. What the Dow would need on its monthly chart, it would need to close below 16,458.05 out here. But otherwise, we have the same pattern that is in place. Now, the Dow here has completed its consolidation move out here. That was a long-term consolidation taking you back into 1997 time frame. Those are the two yellow boxes that you see on my screen out here. In the case of the Nasdaq Composite, on a monthly basis, it has made it up and it's tested the swing point and rejected it so far, the lows of March of 2000. That number was 43.55.69. Now, what you're seeing on my chart here is the NASDAQ happens to have an 11-month cycle pattern out here. And the interesting thing is that cycle pattern completed in April of this year, this month that we're in right now. And if you take a look at this 11-month cycle pattern out here, what the NASDAQ tends to do is make a swing point high or low every 11 months out here. If you take a look at it, it takes you back to September of 2000 or September of 2002 out there. We saw a swing point low. Go forward another 11 months takes you into August of 2004. That happened to be a swing point low. Take you back into July of 2007. That happens to be a swing point low. Take you back into June of 2008. That happens to be a swing point high. Takes you back into June of 2010. Happens to be a swing point low. Take you back into May of 2012. May of 2012 really ends up being what? A swing point low. When you take a look at where price actually closed out the month, that began a rising price channel. Price continued to move higher. So now at this stage here, we are now in that 11th month cycle out here. And I can't tell you, we'll know in the ensuing months out here whether or not we see prices move higher or lower. But when it comes to the NASDAQ Composite, it's either made a swing point low or it's made a swing point high. How can I make the case that it's made a swing point low? Just by going and taking a look at the New York Stock Exchange patterns that are out there. New York Stock Exchange is trying to break through a larger 6,000-point consolidation area out here. But kind of the cool thing, I mean, this takes you back here into the time frame of 2000. Right? We're in 2014 right now, and a pretty cool 11-month cycle. Does it mean it's going to work this time? Hey, folks, it's been working since that time frame, so there's no reason for me to believe that it's not going to work this time. So it's not so much that the month of April is important to us. It's really what happens in the month of May, in the month of June out here. We are moving into the so-called unfavorable seasonal cycle out here, so that you'd have to say the preponderance of evidence suggests that maybe what we have seen out here is a swing point high. But you've got to wait for this pattern to play out. Now, the cool thing is, it's like it's an 11-month pattern out here. So I think it is very important to be paying attention to. So that's what's going on in what is also the weak link inside the marketplace. Now, we say weak link out here. Let me go ahead and put up the Rhodes Momentum indicator system. Let's take a look at this. And this is really, if you can understand what's going on inside the larger trend out there, makes it a little bit easier to navigate where it is you're going to. I mean, picture yourself being on a boat in the middle of the ocean out here, and if you were out in that boat, wouldn't you want to know what the weather pattern is up ahead? And in the case of the NASDAQ Composite, with regard to potential reversal signals, which are candles, what we can see here is that the larger trend is really still in place. The larger trend is still in place. Larger bullish trend, not bullish trend, super bullish trend. That's what the blue highlighted areas, light blue highlighted areas on my screen here. Those are blue skies. Those are strong move out here inside of the composite. And we have not seen support taken out inside of the composite. That happens to be the little bull sash candle here. That took place back in, February of this year. Price is now just beginning to break through the body, the open of the body, which is important. That's at 41.0506. That's a key number to be paying attention to as we finish out the month. Reason being is that it closed below that. Then you start to get a blended candle out here that shows some potential reversal. The key inside of the composite, without a doubt, is if we were to see a close, and I doubt that it'll happen this month, but a close below right now, 38.74. But the larger trend inside of the composite is still intact out here. Now, that is not the case. Remember, I said on the 120-minute chart, we will see things turn before we see it turn on a day, then on a daily, then on a weekly. Now, if we put the weekly chart for the composite up here, the weekly chart has begun to show us what? In the composite, has begun to show us a downtrend. Let me try to use a line tool out here. Let me do this. We'll put this on the screen. I'm just going to simply use... I'm going to create a bit of a channel. I'm going to use the body of the candle here from March of 2014, and we're just going to connect it to this body out here. And in essence, right now, I've only got 2 touch points, but that really becomes my channel line out here. And until we see on the weekly basis, and you also see this little crossover here, these 2 moving averages. Well, if we take a look, and I pull this back out here, I'm going to pull this back. Last time we saw that crossover was all the way back here in November of 2012. So this super big bullish run that we've seen out here, this is now starting to, so we're seeing on a weekly basis. So on the monthly basis, hey, the larger trend is in place. The weekly basis is saying, very interesting. We had a price relative strength divergent pattern. We had a confirmation of that. We've had a couple of bearish reversal signals out here, and we're now seeing a trend line. In order for the composite, in order for that 11-month cycle that we were taking a look at on the monthly chart out here, what we would expect to see is a break of that channel line that I've drawn, which would also coincide with the close above 41.8519 on a weekly chart. If we were to see that, then I think we see higher prices. But if we don't see that, and that acts as resistance, again, that number is 41.8519. Last week we saw price get up above that area, got up to 41.77 and rejected it. That becomes your resistance area right there, and that is the key number to be watching. So inside the composite right now, on a weekly chart, it's communicating, to me at least, nothing more than a counter-trend rally that we are seeing take place inside the markets. If we look at the daily chart out here, and again, all I'm doing is filtering out the noise. What is it that the charts are telling us here? Inside the, it carried forward that line out here. We can draw, I believe now on the weekly chart, we can draw a proper channel line out here. Let me pull this off to the side. Let's use it as the touch point. Let me come back, and I'll use the top of that session here. Let me grab the line tool. I think we can connect the dots out here. We can get, there we go. So now we've got 3 co-located opens or closes, and there becomes the trend line. That's the red diagonal line that we see today. That price level would be about 41.58. So on the daily chart out here, the downtrend that is clearly in place, the descending price channel that is clearly in place inside the NASDAQ composite, it will not break that unless we were to see it close somewhere right around 41.58. We'll call 41. Let's just call 41.60. Of course, that's today. Tomorrow it becomes a little bit lower because the trend or the channel line is actually descending out here. So on the daily, on the weekly, inside the NASDAQ composite, they clearly are in a downtrend. Whereas the monthly right now, not so fast, is what the longer-term trend would say. Right now, the Dow's up 124, S&P is up 11. We get back. Let's go take a look at the intraday chart. Let's go see what it says. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. So we got the Dow's up 116, S&P is up 9, Russell 2000 is up 1.5 out here, so certainly a laggard out there. The NASDAQ Composite is up 0.3%, so it's the Dow that's leading the charge here. Got the Composite up 15 points. So it truly is the battle between the Dow and S&P versus the Russell and the NASDAQ Composite. Now, I've got the 120-minute chart here up on my screen here for the June contract. Well, we can see a number of different patterns that we can take a look at. Number one, from the bullish side, we've seen a break of a descending price channel out here. We saw that break take place back at about 2 o'clock in the afternoon, back on April the 21st. Now, what has also completed, though, is a 1-to-1 A to B equals CD to the upside. That's coming off of the swing point low here, 2 o'clock in the afternoon, April 15th low at about 34.04.75. Your B point out here about at the close, 5:15 in the evening, back on April 16th, around 35.24. Shallow retracement, 1-to-1 A to B equals CD. The price projection was 36.1181 out here. So it's completed that pattern. Of course, as it was completing that pattern, this is at 10 o'clock in the morning. This is on Friday, April 24th. What does it do? Key reversal session out there. Now what we are seeing, let's take a look at the A to B equals CD pattern here, the downside. Well, first let me do this here. If you take a look at this candle formation, I'm going to blow this up on the screen. This is the last candle it formed, so it's a 2-hour chart we're looking at. This is 10 minutes. If you were to look at that candle, I'm just going to ask you if you're watching this, how many of you out there think that that's a hammer candle? Looks like a hammer, doesn't it? Smells like a hammer. Then my question is going to be, how many of you think that that looks like a bearish engulfing candle? Something to think about. Because I know that most folks would actually take a look at this candle configuration, and they would look at it and they'd say, hey, we just had a hammer candle that formed out there. Remember, the body of price, the body of a candle is the essence of price out here. The body of the candle is something you really want to focus on. It is not both. You can't be both a hammer. You can't be both a bullish and a bearish candle out there. You've got to be one or the other out here. In this case here, this actually is a bearish engulfing candle. It is not a hammer candle. Now, that doesn't mean that the bulls didn't rush in here and try to save that session by pushing price up. But what you've also got, you got this little doji candle that took place right here at 8 o'clock in the morning, and then you had now, albeit doesn't have to bearish engulfing, does not have to wrap around much of a body out here, but it does say that resistance really is the top of that doji candle out here. It says that resistance at 35.47.50. That's going to be a key level to watch during the session here. That's going to end in an hour and about 3 minutes out here. So what we have that may be occurring here is an A to B equals C to the downside. That'll take us down and test the bottom, or actually potentially get back inside that descending price channel. And that's really what you want to be looking at for the NASDAQ. Now, I'll put one more thing out here. I'll go ahead and put a couple of moving average lines out here. The blue line here has busted through that red line. That is bearish, not bullish out here. So, again, candlesticks are so important because it is the bulls and the bears that are absolutely communicating to us, and that is not a hammer candle. That, folks, is a bearish engulfing candle that completed here at the session at 10 o'clock. So what are we going to be paying attention to? Certainly want to be paying attention to net advancing issues inside the NYSE. The NYSE, the bulls will take back over the ball that they gave up, that they fumbled. If we were to see net advancing issues greater than, 389, I believe is the number. You're above that right now. You're at 757. You're also watching the VIX index out here. We got the VIX index. If it can close above the 50-day exponential moving average, right now you're at 1419. The number is 1450 out here. So those are the two numbers to be paying attention to. Folks, thanks so much. It is Marvelous Monday. That means we got our man Basil Chapman up next. I believe he's going to fill in for Larry. So we got 2 hours of Basil. I'm going to go ride some waves. That doesn't mean I can listen to Basil while I'm riding those waves. But when I come in on shore, I'll put my headphones in and I'll listen to Basil. You should listen to him for the next couple hours, folks. Have a great Monday. Look forward to seeing you soon.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.